Hello, this is Neal and Renee Simpson from Advanced Wealth Strategies with an educational economic update for February 2018. In this month's video, we'll discuss some of the major headlines that influenced markets in January. We will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement.
January 2018 is behind us, and stocks posted quite a positive start to the year. In fact, even anticipation of the first federal government shutdown since 2013 didn't derail markets. The S&P 500 and Dow both had their best monthly performance since March 2016, with each rising over 5%. The Nasdaq gained 7.3%, making January its best month since January 2015. Several details that came out during this month indicated that a strengthening economy is driving market performance. Initial readings of the GDP showed that the economy grew by 2.6% in the fourth quarter. Though smaller than projected, the increase still implies a healthy economic growth. Corporate earnings data also suggests that the economy continues to expand. During January, many companies released their earning reports for the first quarter of 2017. By the end of the month, 81% of S&P 500 companies that had shared their earning data beat expectations, and 83% exceeded their revenue estimates.
In addition to growing corporate earnings, labor measures seem to illustrate that the economy is advancing. The ADP employment report indicates that private companies added more jobs in January than analysts expected. Further, fewer people filed for unemployment in late January, keeping initial claims close to a 45-year low. Unemployment currently sits at 4.1% and could go as low as 3.5% by the end of the year. And wages are finally starting to pick up too. According to the Labor Department, the employment cost index in the fourth quarter was 2.6% higher than a year before. This increase is the largest since early 2015. Examined together, you see a growing market, increasing corporate profits, low unemployment, and rising wages. But this positive news is not without risks.
If the tight labor market leads to faster wage growth, inflation could increase. At that point, the Federal Reserve could start raising interest rates more quickly than anticipated. The Fed met at the end of January and decided to keep interest rates the same for now. They did indicate, however, they expect inflation to increase over the next year. After years of inflation missing the Fed's 2% benchmark, the markets would have to decide how to react to prices increasing more rapidly. Ultimately, we have strong growth and corporate earnings on one side and then the potential for faster than anticipated interest rates increasing on the other side. Looking ahead, we will continue to analyze the interplay between economic growth and inflation. Only time and data will tell exactly how these connected pieces will come together, but we will work to keep you informed along the way. That's it for this month's Educational Economic Update. Here is an upcoming event that we'd like you to know about. Advanced Wealth Strategies will host the Lake Norman Chamber of Business After Hours on March 15th from 5:30 to 7 p.m.
Once again, this is Neal and Renee Simpson with Advanced Wealth Strategies signing off for the month of February 2018. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 704-579-0015. We'd be happy to talk to you.